In this video, I want to show you the power of a 4-year Amazon cash flow spreadsheet for Amazon sellers. The focus of this case study is looking at the different pricing strategies of a variety of competitors in a market and seeing if we can predict which ones would survive. And the test for survival was the business reached $1 million in sales in 4 years. So we're looking at the typical goals that people would have in their Amazon business. They want to reach $1 million in sales in 4 years. They want to be able to withdraw $100,000 as owner's salary in year 3 and beyond, but no owner's drawings in years 1 and 2. So they're basically going on with this business. They're not drawing anything out. They're reinvesting all their profits. But in year 3, they say, well, we want to take some salary from this. We want to get some benefit from it. So the test was they want to be able to take at least $100,000 in salary in year 3. And the third test was never going into negative cash, because the assumption is that if the business goes into negative cash, then they don't have enough to restock their inventory for the existing products and the business stops. So they're never getting beyond that level of sales and going into years 2, 3 and 4. So if they reach negative cash, they're not going to reach $1 million in sales within 4 years. And I assumed that each brand's price was reflective of the brand's overall pricing strategy for their entire brand. So to find a sample for a case study, I looked through the best sellers for home and kitchen until I found a typical non-branded private label product that sold for over $15. And I found an apple peeler. You might have one in your home, peels and cores apples and actually makes a mess. But anyway, we had a quick search on Amazon, and this is just a sample of them, but within the first page, we found 13 that were almost exactly the same product. There were some that were motorized and some that were plastic, but we excluded those ones from the test. And what we're looking at is just these ones that are basically exactly the same product. So we then use Jungle Scout to give an overview of that market. We can see here, it's kind of a massive numbers, but we can see that $24, $59 for KitchenAid one. We've excluded that one because it's a KitchenAid motorized sample. And there's some plastic ones in here as well. So what we've done is excluded that. This, however, gives us a bunch of revenue numbers that are a bit difficult to really work out what's happening with the market. So we went to treehousemetrics.com. That's a product that I developed, which enables you to analyze and visualize the Jungle Scout data so that you can make it easier to look at. Because if we look at the Jungle Scout data, it is just a massive numbers. Now, I like numbers. I deal with numbers all the time. This is kind of hard to read exactly what's going on. So Treehouse Metrics enables us to analyze the one-off Jungle Scout data file. So if you've got multiple Jungle Scout files for the same search term, it'll actually help you analyze the market over time as well, because that Jungle Scout file gives a snapshot at that particular time. And what we want to be able to do is look at the market over time anyway. So we look at it in terms of one of the graphs from Treehouse Metrics was the price volume scattergram. We can see here we've got Victoria Kitchen Products, which is out here selling probably 7,000 units, and then we've got the competitors. Now, the competitors aren't actually not selling at all. It's not as though this product is completely overtaking the market. It is dominant. It is sold by Amazon. I believe it's one of the Amazon products. But we've got these other products here that are actually selling in reasonable volumes. It's a really quick way to telling where the market is. So we can see, okay, we've got the volume down the bottom and the price, and it just gives us a quick overview of where everyone's sitting in the market. So we've got these particular products, a typical curve. As it gets more expensive, they're selling less. And then we've got a bunch here that are selling not quite as many, but a lower price as well. So if we look at the units sold, we can see that the top seller is selling almost 8,000 units a month. This is just a snapshot. Whether it's exact that figure, we don't really mind. It's really just an overview. That's why I suggest you look at a particular search term over time to see that this is in particular a sale that's going on in one particular day. But we can see that the others are selling close to 2,000 units a month, 1,000. Some are selling very little, but we've got some volume there. If we look at the price, this is just for the top 10, not for the entire 13. We've got a range of different prices. So some quite high, others around the lower area. And what we're trying to do is to understand what that mix is and how the profits are different for each person and whether that business will survive. Now, if we look at the reviews, a quick table of the reviews, we're seeing the Amazon products got almost 3,000 reviews, but these other products have got substantial number of reviews, 1,000 reviews, probably 750. So they've got a number of reviews. They've been going a while. So what we then did is went into Alibaba and said, okay, well, what type of price can we get these for? So this is quick search from the first page of Alibaba for apple peeler, and I found the relevant products. So we've got them ranging between about $2.60 to about $5.70, I think. And they've it seems to be that the average is about 3 to 4 for a minimum order of 1,000 pieces. Now, all of these are exactly the same. They're exactly the same product. You know, they could be made slightly differently in terms of stainless steel versus aluminium alloy, but basically the same product. So we can see that they're kind of trading, $3 to $4. If you buy more, you get you get some discounts. So what I wanted to do is, when we're looking at analysing each of these, we said, okay, well, let's group them into an area and say, okay, some of these products are selling a lot of volume, and others are kind of not selling as much. So let's base that in, because everyone's got different strategies. Some products may not be, some brands may not be trying to be the best seller. They might be able to just looking at, well, if I sell 300 units a month of this product, then I'm doing pretty well. But I understand that I may be paying a bit more for that. And others, well, they know how to sell. They've worked out the algorithm. They've worked out the nature of what it requires to sell on Amazon, and they're getting at a cheaper price. So I've said, okay, let's look at the group, the top seller. I've just assumed they're getting them for $2.60. Their freight costs are $1. Their FBA costs are $4.13. So I went to the FBA calculator, found out what the FBA costs were, and I've said, well, these people are reordering every 3 months. The next group, they're selling over 700 units a month. They've got a bit more expense. There's at $3. The freight costs, I've assumed, have been the same. It's been $1. FBA costs are the same. The reorder period, I'm saying, okay, you can reorder every 3 months. The third group, well, I'm saying, well, they're paying a bit more again, $3.50, but they're only reordering every 6 months. And the group 4, they're paying quite a lot. They're small volumes. They're paying $5, and in essence, they're reordering every 12 months. So these become the numbers that we're going to put into our spreadsheet. So here is one of them. We're just using this as a basis of saying, okay, this is what their pricing is, and whether they're going to survive. So we're saying, okay, they're going to reach $1 million in year 4, and they're going to be able to withdraw an owner's salary of $100,000 in years 3 and 4. We've used the costs of $3, Amazon freight costs of $1. So kind of in all of these examples, we've used pretty much the same data except for the price, the cost, and the number of days. And in these examples, we've assumed there's no advertising whatsoever. So we can see this one is a success. One of the other products was selling at $14.99, $3 amount paid manufacturer. They got to this point of $1 million in sales in year 4, but they went negative. They couldn't withdraw the $100,000 salary. So they were profitable, they were making, they were still going, but they missed out on being able to take a profit. So what did we find when we looked at these? Now, we're not going to go through each individual spreadsheet there, but you can have a muck around with the same type of numbers. And what I was looking at here is, well, which ones were winners and which ones were losers? And we can see that the green ones, they were winners. So they were able to reach $1 million in sales, and they were able to they were able to take $100,000 a year in salaries in year 3 and 4. And we can see here that obviously the group 1 made it, group A, and then group B, some of them didn't make it, but group C and group D, there's one each from there. So they had enough volume and enough gross profit rate to be able to survive and keep on growing. So what do we find from this? Well, the winners, so they were able to reach $1 million in sales in 4 years and pay $100,000 owner's salary in years 3 and 4. Their gross profit rate was greater than 31%, excluding advertising. So these examples are excluding advertising. So if you've got 4% being your advertising cost, well then you'll have to get a gross profit rate of 35%. These ones, the next group was still in business. There was 2 of those. They were able to reach $1 million in sales in 4 years, but there was no cash to pay your owner's salaries. So in those ones, the gross profit rate was between 23% and 30%, excluding advertising. So we can see here that if you've got a gross profit rate of above 31%, then you're able to keep on growing and be able to take a salary. Once you start dropping down below that, it's going to affect your ability to grow, or alternatively, your ability to actually get money out of the business. And a point should be made, these are fairly rapid increases in growth over the 4-year period. I mean, basically, we had a doubling or tripling every year. So, and then the losers, well, there was no growth, basically due to cash flow shortages. So they went negative in year 1 or year 2. Their gross profit rates were less than 23%. They were unable to generate organic sales. So you can see from some of them they had very poor reviews, or they just a couple of them in there looked like they were trying to liquidate their stock. If we took that as being a brand and pricing strategy, we can see that, well, if they were below 23%, they weren't going to get there. They didn't get beyond year 1, basically. If it was between 23 and 30%, then their business got to the point, it kept on going, but they're kind of spinning their wheels a bit, always worrying about where the money's coming from, where the cash was. And if they were greater than 31%, they had spare cash. In any business, the business with the greatest cash flow wins. Now, if you want to download the Amazon Cashflow spreadsheet, there's a form below here where you can download it. Just put in your name and email address and we'll send it to you. And I suggest you put in your own data and see what results end up for your business.